Let's talk about everybody's favorite subject, taxes. Now, earlier this week, I posted a video recapping my sports card business for the month of February. Something we do here on the page is give you guys a look at our books, show you where we're spending money, show where we're making money. I'm all about transparency, and that's something that I think is important. But as a part of that video, I talked about how this month I had to pay my taxes for 2024, and I got a lot of questions asking me about how I'm set up as a business, how I think you might want to be set up as a business, etc. So figured, let's talk about it. So I put together a quick little slideshow that should just provide a little visual aid while I walk you through my understanding of these things. Let's get to it. So, sports cards and taxes. How should you set yourself up? What should you expect? Etc. First thing, starting this off, big disclaimer, this is not financial advice. Go get yourself an accountant. I'm just a guy. I have no background in finance. I have no real background in business. I just really like sports cards, and this is what I have learned through establishing my business over the last few years. My understanding on some things may be wrong. At the end of the day, defer to somebody who is a professional, defer to somebody who really knows what they're talking about. This video should be more of just a guide for you to maybe think about whether or not you're ready to have these conversations about taking that next step up and incorporating yourself, or whether or not you should be trying to contract an accountant, do some things at a higher level, etc. So the first option that you have that you could really set yourself up as a business is a sole proprietor. This is what you probably are right now. Now, this requires no registration. Any sales that you make are basically just being taxed in your personal tax return. This is anytime that you get a 1099 from eBay, which is where they say, hey, we paid this person all of this money this year, and you then on your tax return will go and you say, okay, here is all of the additional income that I made. Here are the expenses that it took to do that, and you basically get to file that return. Any income that you make, though, is not being taxed when you take it. So that what you're going to run into at the end of the year is all the money that you made on flipping cards and doing things is right now not being taxed. So when it comes tax season, you are going to owe money on your profits and what you have taken out of the business, if anything at all. So this means that come tax season, you're going to owe a few things. The first is federal income tax. Now, depending on how much your total income is, that's going to vary between 10 and 37% generally. Now, if you are somebody who makes under, that tax threshold holistically, if you're a student, something like that, you might not owe any federal taxes, but generally anticipate that you're going to owe federal taxes. You're also going to owe self-employment taxes. And the self-employment tax is basically to make up for the fact that on this income that you are taking, you are not having to pay Social Security, Medicare, Medicaid, etc. So that's an additional 15.3% that you're going to have to pay there. You also may have to be paying any state or local taxes. Here in Tennessee, we do not have a state income tax, but if your state does, you will owe state income tax in addition to these things as well, because that money that you made at the end of the day is income. What is nice, though, is you are not necessarily, again, maybe, you may not be subject to some local taxes. So here in Tennessee, if you incorporate yourself as an LLC, which we're going to talk about on that next page, but if you set yourself up as an LLC, you then are opening yourself up to that you are going to have to pay the Tennessee franchise and excise tax. As a sole proprietor, you don't pay that. As an LLC, you do. So why would you want to become an LLC? Well, there are some benefits to it. The biggest is that it's going to protect your business from personal liability and your personally from your business liability. So if anything happens on either side of that house, if something happens to the business and somebody was to come after you, sue you, etc., they could not come after your personal assets. They couldn't come after your house, literally. Vice versa, if something happens to you personally, you get in an accident, something happens and somebody is suing you and coming after you, they then can't come after your card inventory. So it does create a layer and level of protection because it's basically saying, hey, the business owns these things, I don't own them. While I own the business, these at the end of the day are business assets and they are not personal assets. So they are in a different class essentially. It also ultimately allows you to elect how you are getting taxed. Now, it also allows for some more deductions like health insurance or retirement savings, which is nice. You may be subject, though, as I mentioned, to those additional taxes. Tennessee franchise excise tax as that example there. Back to electing how you're being taxed. very likely as a LLC, starting off, you are going to be taxed as a sole proprietor. It's going to do nothing for you outside of protect those assets, liabilities, separate those essentially. So why would you want to be an LLC? The biggest reason is basically doing those things. I would recommend setting this up personally. If you get to the point where you say, if something were to happen to all of this card inventory, or I am operating at a level in terms of my business and how much money is coming in and out of the door, that there is a level of discomfort if something were to happen and that all were to be able to be taken away, messed with, etc. It costs extra money to do this, to set up an LLC. So once you get to the point where you have a significant amount of revenue and inventory is when you probably want to think about that. The other way, though, that you can be taxed is as an S-Corp, which is how I am set up as a business. And we're going to talk a little bit about me at the end of the video here. You, as an LLC, can elect, it's a form that you'll fill out with the IRS, you can elect to be taxed as a S-Corp. Now, why would you want to do this? Well, who is it right for, etc.? The biggest thing is that you really need to be profitable in order to take advantage of the tax savings for the S-Corp. You have to pay yourself a reasonable salary. So the S-Corp has some tax advantages, which we're going to talk about in just a second here. But in order to really take advantage of that, you need to be able to profit after paying yourself a reasonable salary. Now, there is no guideline technically on what a reasonable salary is from the IRS. It's kind of silly, but there isn't. But in general, if you're not able to pay yourself, if the IRS were to come and audit you and you said, hey, I'm working 80 hours a week for $15,000, they're going to say, no. That is not a reasonable salary. You have to be able to back that up and provide some sort of argument and evidence that what you're paying yourself is reasonable. It also comes by paying yourself, by having that reasonable salary, you're going to have the additional cost of payroll processing. So I use a company called Gusto, and they run my W-2 and all that payroll processing. So I have to pay them a monthly fee. And then as a part of that payroll, I'm also now paying taxes because I'm a W-2 employee. As the business, I'm paying some taxes. And as an individual, I am paying these typical taxes that you see taken out of your paycheck when you get paid. The reason, though, of why you might want to be an S-Corp is if you hit the point where you're able to make excess profits, where you are paying yourself that reasonable salary and then there's more money available to you, you can distribute those profits to your ownership, which is you, or in this situation, me. The big thing here is those excess profits are not taxed on the self-employment tax. I'm going to repeat that. Your excess profits after what you have reasonably paid yourself as a salary, the other profits that you make are not going to be subject to that 15.3% tax, which is where you can save yourself some money. You will be taxed on those profits still, but that is just going to be at your personal federal tax rate. So for me this past year, that was 24%. I believe you will also still be taxed at a state level as well. So let's look at my 2024 recap and see what the difference is in terms of my savings by being a S-Corp. So my business income for the year of 2024 per my tax return, which just got filed by my accountant, was $82,350. As a sole proprietor, I would have paid a federal income tax of 24%, $19,764. I then would have paid a self-employment tax of $12,600. If I had been an LLC, but I was being taxed as a sole proprietor, I also would have owed an additional $2,273. That would have put my total tax liability for the year at $34,637. Now, as an S-Corp, you're still paying that federal income tax. I still have my Tennessee franchise and excise tax. But my total tax liability there is $22,000. I basically am saving that $12,600 that I would have had to pay had I been a sole proprietor and that money was being subject to the self-employment tax. There is one big asterisk and flag here, which is tax that I'm personally paying, which is still tax. I mean, I'm paying it in the sense that the business pays me pre-tax and then I only net a certain amount, as well as the tax that the business is paying. Basically, those taxes that are reflected on your W-2 are not reflected here. So looking forward to the year 2025, 2024 was weird because I didn't go full time with the business until I quit my job in August of last year. So really September, we only had a few months of being kind of a W-2 employee. It was a little bit funky of a year from a tax perspective because we incorporated the business in July. It does not look like what a typical year will look like. I estimate that my total tax savings is going to be about $7,500 for the year of 2025 because I'm paying about $635 per pay period, and I have 24 pay periods on my W-2. Now that is both the taxes that I'm paying as an individual as well as the taxes that the company is paying. That adds up to be a good amount of money. But if I continue to profit at what I anticipate that I will, what I've done the past 2 months, I think we will save about $7,500 in taxes. So I look at that as more of the reasonable amount that you could think if you hit the point of profitability. So that's my look at my taxes. Let's give some closing thoughts and words here. So to close this out, just reiterating that I am not a tax professional. If some of the things that I talked about here resonate, if you are looking at your business and you're saying, hey, I think that my sports card business may be at a point where I'm ready to make a jump or I'm ready to pay myself a reasonable salary and I'm making some profits, is it worth me thinking about being a S-Corp? Or if you are at the point where you say, I have enough in terms of inventory that I probably should be setting myself up as an LLC, go talk to an accountant. This is my rudimentary basic understanding that I have gained through doing this for the past year or so and trying to set myself up as a business. I'm still learning new things every day. My background, again, is not in business, so I'm learning. This is just what my understanding is. Overall, though, I think that it was worth it, and I think going forward that it will continue to be worth it, hoping that the business continues to scale and we continue to see even more profits. But time will tell. I will have a deeper, bigger breakdown on that, of course, when we get to next year in 2025 taxes. But if you guys want to see how the business continues to do over the course of 2024, hit that subscribe button. We will continue to have monthly card business updates. We'll have one for March. Very, very excited and intrigued to see how that goes. So should be a very, very good time. As always, I appreciate you guys checking out the video. We'll catch you in the next one.